Welcome back to the Collections Technology Think Tank. My name's Colin White and I'm from Credit Connect Media. Thank you for joining us. For those of you just joining us, you've just missed a session where we covered customer engagement and the future a little bit and collections challenges in our last event. That was really good. That took place this morning. That's been recorded and we should have the recording ready to be shared in 24 hours time. So if you didn't get a chance to have a look at that, please, the recording will be available later today and I'll share that on the socials. Welcome back to this session, and we'll be talking about affordability and vulnerable customers. But before we carry on, I just wanted to really introduce you to our buttons that you've got in front of you so you can interact at the event. So highlighting now is the information button on your screen, and that you can view information about the event. The next bit down is got the third one down has got a button where you can find out more information about our speakers. So have a click on those. We've also got a section on which you can learn about our sponsor of this session, which is Moneyhub. So click on that and you can click through and find out more information about them. And then the final one is also like more links. You can find out more about Credit Connect's events, obviously a bit about Moneyhub, but also you can also find out more about our new awards that we've launched called the Credit and Collections Industry Awards, which we're pleased to be announcing this year. So yeah, it'd be great if you can have a look at that. But the most important thing in this session is obviously if you can get involved. So we've got our social media handle, Collections Tech TT. If you want to get involved on social media and write some comments about the event, that'd be good, ideally positive. And then, but more importantly, you've got this speech bubble icon here. We'd love for you to ask questions and comment on this session as well. So it'd be really important for you to do that. So it'd be really, we had in the last session, we had about 6-7 questions, which is brilliant. We don't always get through them, but as I mentioned previously, we do write up an event review after the event, which we'll share next Thursday on the Credit Connect website. We'll round up that, any questions that we don't cover, but we'll also cover some polls, which we're sharing through this session as well. So we'd love to get your feedback and thoughts through those polls as well. But enough from me. I've gone on far too long, as usual. I will now hand over to our event chair for this session, Chris Warburton from RO Strategy, and here introduce our panelists, and we can hear their thoughts around affordability and vulnerable customers. Thanks, Chris. Over to you.
Thanks, Colin, and welcome back, everyone. For those who've rejoined, really appreciate you coming back. And for those who are new, then welcome. So just really briefly, my name's Chris Warburton, Director of RO Strategy. Been in the sort of the risk operations space for the last sort of 20 odd years. It's probably a little bit more than 20 now, in all truth, but really looking after processes across risk operations, looking at processes and technology across the customer risk operations life cycle. And more recently, I've been in like a series of videos looking at the latest developments in technology. So I'm going to be chairing the session. And this session here is really around affordability and vulnerability. And it's a topic that we've talked about a lot over the last sort of 3, 4, 5 years. And it's been a huge topic of conversation, but it feels like the conversation keeps evolving and it keeps changing, and it's probably as important now as it's ever been. And the regulators sort of sitting in the background with new changes that are coming through, so things like consumer duty. It's really forcing both affordability and I suppose things like forbearance plans, etc. But affordability, financial difficulty, and vulnerability really sort of keeping it top of mind. And so we're going to unpack just some of the latest thinking, the latest developments, the latest technology, sort of in this session today. Where do we currently sit, and then where do we go from here, really? So that's the objective for this session. And with me, we've got four great speakers again. We've got maybe if you guys just wave when I say your name, so you can introduce yourself. So we've got Dean Bartlett, who's the arrears and litigation manager at Pepper Advantage. So welcome, Dean. We've got Steve Craske, who's the senior collections manager at Jaja Finance. Give us a wave, Steve. And Suzanne Homewood, who's the MD decisioning division at Moneyhub. And last we got Enzo Montagnino, who's the quality assurance and training at ARC Europe. So so everyone, welcome to the panel. It's great to have you here. So to kick off, I mean, Dean, I was going to come to you maybe first and just say, like, what are some of the big trends that maybe you're seeing around vulnerability and affordability, maybe just starting this year, sort of coming off the back of 2023?
Yeah, thanks, Chris. It's an interesting question as well to start with. I think one thing certainly we're seeing here is that the blend of vulnerability and affordability, and that line between the two, I think is more blurred than it's ever been. I think historically, when we talk about vulnerability and affordability, they're two quite different topics that mean different things. But I think what we're seeing more and more now, particularly as we kind of unpack the impacts of the cost of living crisis and the knock on that that's having, is that actually affordability and vulnerability, that line is really blurring now, and one can very much sort of lead into the other, in terms of, sort of the impact we're seeing on cost of living, on sort of, mental health impacts. I think we've probably got more pinch points coming over the sort of the end of Q1 going into Q2 this year, in terms of kind of bill increases and the affordability concerns that's kind of bringing up for customers. And I think what we're seeing is, affordability is becoming a vulnerability in of itself.
Yeah. I mean, Stephen, are you sort of seeing changes in, I suppose, delinquency levels in one sense, but also then the ability of people to be able to afford? I mean, is that changing even over the last sort of, like, you've got the longer term horizon, but even the last sort of like 3 months or so? I mean, are we seeing sort of any recent changes? What's your kind of view on that affordability angle?
Yeah, I think we are seeing overall lower affordability, but I think it depends on the demographic of the customers as well. So, we're seeing different things depending on our portfolios, where we see that, for example, we're seeing more first-time debtors now. So, you may have what we would historically call professional debtors who sort of knew how to handle being in arrears, and maybe went into in arrears in a semi-regular basis and knew how to handle it. We're now seeing a new set of customers who have never been in financial difficulties before and don't know what to do, and they're relying on us to provide that support and to provide that insight to those customers. So that's something quite new that we're seeing. I still do think, from everybody around, this call and start listening to it will have made assumptions around what we were going to see in terms of delinquency. And I think everybody will have been off. I don't think it's been quite as bad as we anticipated originally. I think we've seen that people have got a little bit more resilience, and that's a problem. We don't sort of know. We can't guess where that resilience ends just yet. To Dean's point, there is some changes coming, gas and electric bills and stuff like that. But they're also starting to come down a little bit as well. So I'm not quite sure how it's going to pan out going forward. I think we're definitely going to see some more pressures, but probably not as bad as we all expected a couple of months ago.
Yeah, I mean, and Suzanne, what's your kind of view, I suppose, particularly sort of analytically, I suppose, to a certain extent, in terms of, like, I mean, is the population, the customers who can afford it already can't afford it, is that changing subtly in terms of, like, the way we sort of, I suppose, almost like segment it or look at it, maybe than it has done historically, which makes it then harder to predict what's kind of gonna happen? I
think you're right. That you're talking about data and insights and how you understand people's positions. Excuse me, I apologize now. I've got this dreadful cough that just won't go away. So I'm sorry if I cough partway through. So yeah, I mean, we're a data platform, so we enable organisations to have access to much more detailed insights for the customers. And I guess what we're seeing from our lenders and collections customers is, as Dean said, that there are more people that are coming into that, and that blurring of, are people vulnerable at that affordability check. But the point of the data is you can get into that detail and the real background detail with the customer at a more granular level, and help them understand the impact of their spending, their behaviours on their situation, so that you can make better decisions with them and for them. And I guess that's the difference that we're seeing is, I think organisations and customers expect more help. They expect more when they're applying. They expect more from their provider of whatever it is they're applying for, to help them get the right product. I mean, I know we're going to potentially talk about consumer duty later, but that's exactly what consumer duty is aimed at. And whilst I think we've got the FCA saying, organizations, that's what you need to do, I think you've also got the consumer saying, help me. I'm in this situation. How can you help me? As say, whether that's in forbearance or as in the application, but and the data is there to help them.
Yeah, and Enzo, I suppose from your perspective, in terms of like, obviously, you spend a lot of time sort of like, working with customers or helping customers. What do you hear directly from them? And has those conversations kind of changed from the ones you've been listening to? Have the conversations changed than they have done over, since the summer last year? I think you're on mute, Enzo. Enzo, I think you're on mute. Can we hear you now? We might have a sound issue, so we'll Enzo, we'll come back to you maybe just while we kind of troubleshoot that. And I suppose it can be quite, just going back to, I suppose, the data point. I suppose it can be quite nuanced, can't it, in terms of like understanding, I suppose, like how do we sort of like identify affordability, how do we identify vulnerability, and like using data to kind of like look at that kind of nuance. I mean, Dean, are there any kind of like new elements, or how's best to kind of approach that?
Yeah, I think certainly how I view we best approach that is by taking a blended approach. What data and technology can do a really fantastic job of is building up kind of almost sort of customer personas, so to speak, and giving us those kind of sort of risk profiles, allowing us to kind of perhaps identify early indicators of affordability concerns or vulnerability, and almost kind of allow us to get a little bit of ahead of the game. And we can see things like that in terms of kind of risk strategy profiling, what other kind of indicators or suppose warning flags that there may be trouble down the line. And so data can be really, really useful in kind of helping with those broader kind of strategies, and as I say, that sort of risk segmentation. One thing I firmly believe is that it doesn't replace that human touch. It works alongside that. So I think data gives us the insights, but where data sometimes can be lacking is in that kind of context to the insights. So data doesn't always give us the full story, and I think the blended approach of using data intelligently and maintaining that kind of sort of human interaction, whether that's through digital platforms or more traditional kind of over the phone conversations, but having that kind of blended approach.
I mean, do you think that using the data allows us to sort of get ahead of the curve in terms of like finding people who might be obviously have affordability issues, but also vulnerability issues as well? I mean, Stephen, what's your kind of a best approach? I mean, really, some of this is like pre-arrears stuff as well. I mean,
exactly
that's always tricky, right?
Yeah, so look, I agree with what Dean's saying there. So data is super important, but how we use it is more important. So there are so many different data points, but we have to look at those data points with an individual as well, and make that customer persona, like Dean was saying. Because the trouble that I've seen in the industry that's not being done as well is that we take a lot of data points and we make an assumption based on it. But what we need to be doing is looking at behavioural characteristics and how changes in behavioural characteristics affect somebody. Because that's a bigger tell for us if somebody is going to go into arrears or is vulnerable. Those changes in behaviour are the key bits. So, being data rich, but being the right data rich and having the right tools for us to be able to identify those customers and identify behavioural changes is a key part of data for me.
So it's not just the actual data point itself, it's how that data point has then changed over time. And does that mean that something's actually changed in their life, as an example, particularly for vulnerability, I'd imagine? But
exactly, and it's not always just instances. Sometimes it's about consistent changes in behaviour. If I give you an example, when we changed gas and electricity suppliers when we were going up, all of a sudden gas and electricity suppliers required a month's payment up front, not by direct debit. That had never been seen before. So if one of your characteristics you look for was somebody paying gas and electric on their credit card, well, all of a sudden you broke your model because you've had one instance of paying it. So you have to be really, really careful and understand what's going on in the industry as well, and tie those pieces together and look for, sometimes sustained activity, sometimes it is instant, but we need to look at that sustainability as well.
Yeah, I mean, and I'm not sure if you're back now. We can hear you. I think we can.
Testing.
Yeah, that's very good.
Oh,
Yeah.
that's
So
lovely. Sorry about that.
no, that's okay. I mean, so going back to some of the things that you've been hearing, I suppose, just in terms of like what you've been hearing from customers in terms of like this change of dynamic, and we're just chatting there around, can we use data to maybe even preempt some of that and have earlier conversations with people?
Yes, I think one of the really key aspects is kind of like, where, obviously late stage collections as I work in, collecting data all along the line is really important. Gone are the days when I think, we used to just get, name, address, balance, that sort of thing. It's important to get as much information as you can, and that really does help with the customer journey. I mean, with regard to how we like to approach the whole debt piece, is to actually attach what we do on the back end of the customer journey, so it kind of there's a natural flow from what's happened previously. So, as Stephen said earlier, there's a lot of people now who are in debt who have never been in debt before. So it's really, and it seems like tried and tested, but it's the fundamentals really, like, for instance, something simple as signposting. Because we're in the industry, we know how much free debt advice there is out there. But a lot of the people who are new to debt just haven't got a clue. I think if you said debt to most people, the first thing they'd probably say is Martin Lewis, which may or may not be the most helpful thing for them. Rather than your pay plans, the COBs, that sort of thing, national debt line. So from my point of view, what I'm hearing people is kind of like they're having complex situations. And I think it's really important when we're kind of designing processes, that process isn't getting in the way of practice. Because we're all kind of trying to find and define and reach good outcomes. I know the FCA has really struggled with this question when people have simply asked them, what is a good outcome? Because you're searching for something subjective against something which is very material to people at the moment.
Yeah, and I suppose we talk a little bit about data and trying to get ahead of the curve. And one of the things that came up is like, how can we use that data in terms of like segmenting to generate greater personalization? I mean, Suzanne, is how far along do you think we are in terms of using the data that we've got, and how much further can we go in terms of like making our processes even better to sort of better identify, I suppose, these kind of customers in these situations?
Yeah, it's a really great question. Open banking has been a thing since 2018. Is it being used in absolute anger yet to support customers? Not across the industry as a whole. I still think there is organizations haven't, I'll speak bluntly, organizations haven't really woken up yet to the absolute power of having access to 12 months worth of a customer's financial situation. And going back to Stephen's point on customer behaviors, that's what that data will give you, because what you can see is not just a point in time, what's in your bank today and what do you think you spend on fuel or groceries. It's factual. It's actually what they've spent on fuel and groceries over the last 12 months, how their income's changed over the last 12 months, what things have come in of life changes, broken car, new baby, house move, lost job, all of those things are in that data. They are, and they're personal. A lot of the data points that are being used in decisioning at the moment are things that we've used for a long time. There's ONS, we've got credit scoring data. They're all relevant. They all build that picture. But open banking data and that kind of the customer's actual financial statement, actual financial data adds that real depth and clarity on top of all of that to help make more informed decisions with and for those customers.
And I suppose we go down this road of sort of like personalization, though, and we talked about this in one of the pre-sessions around, so like, how do you persuade people to give up some of that information? And I suppose it's a balance there against when it becomes almost like too intrusive as well, and sort of and we can talk about whether that's sort of changing. But how do we sort of maintain that balance? And Dean and Stephen, I'm kind of interested in your perspective on it in terms of like, it feels like there's a balance there, at least perception, at least anyway, in terms of like causing reticence from a consumer point of view.
Yeah, I think you're right, and I think the key word there is balance, right?
Yeah.
So the customer has to get more value out of a process than they're putting into it. So if they're giving up all of their data and getting nothing in return. There's no interest to the customer. So we have to make sure that whatever these processes are, that they hold value. So in Susan's example, they're giving the open banking. You know, how is that going to be beneficial for a customer? Well, it may mean that instead of it taking, you know, an hour to apply for a credit card, they can now do it in a minute and a half because all their affordability is done up front. And, you know, in the space of doing income expenditure, we all know it's a 25 to 35-minute call. Can that be done in the space of a couple of minutes now? So we have to really make sure that we're selling the idea of what we're trying to present to our customer, but without going too in depth, right? Because we're all human beings at the end of the day. Once stuff starts getting intrusive, or we feel it's intrusive, people put shields up straight away. That ruins our engagement with the customer, which is, in the collection space, is always the single biggest tool we have is engagement. So we have to be careful not to overstep that mark and start to impact our ability to communicate with those customers.
Yeah, Dean, what's your kind of view?
Yeah, no, I agree with what Stephen's just said, and the key word there for me was value. So for me, you know, I'm an operations guy, not really a data guy, right? And for me, the question I'm asking of my data is, what is it doing for me? What is the value it's adding? Now, that value could be making the job of frontline staff easier, and making that kind of communication with customer easier by giving them the data and the insights that they need to have kind of an intelligent, personalized conversation with the customer. Or it could be, when we talk about, you know, the open banking front and sort of bureau data, etc., it could be that actually it's adding value by removing some of those frictions, removing some of those barriers for the customer, rather than spending half an hour going through a detailed income and expenditure with somebody over the phone. Let's click a button, click a consent form, and actually pull, you know, that sort of data straight away. So that's what I'm looking at, is what's the value added? Is it making staff's job easier? Is it leading to better conversations, or is it actually creating data paralysis because we've got, you know, too much data or data that we're not using? And I think that's the key, is thinking about what is this data doing for us and how are we using that?
Yeah, and I suppose one of the, as you were talking there, I was thinking about it also around, you know, are our perceptions of changing? I mean, are customers' perceptions around what's intrusive versus not changing? And although we might be saying, well, look, you know, we're just, you know, very eloquently explained, Susanna, about the about open banking as an example. We know that it can do a lot of these things, but there's a perception out there around whether we can or not. I mean, is that gradually changing? So almost like there's more consumer acceptance of providing more information as we start to trust it. I mean, is that kind of an aspect that maybe we got to think about as well? I mean, Enzo, what's your kind of view on that in terms of some of the things you've been hearing? I mean, do you think the public's view on sharing information is maybe changing a bit, which can help us, or not?
I think the big word here for me is proportionality. I think with customers, they'll understand that if they're in, you know, really dire straits, thousands of pounds worth of debt, then they can perfectly understand the need for open banking, going through a detailed INE. I actually think there's a bit of a space around context here as well for customers. You know, if they're not in huge amounts of debt, but they are in a bit of trouble, they kind of see it as, well, what have I done? Why do I have to do this? It's kind of like I'm being made to jump through these obstacles and giving away some information which I wouldn't want to do normally, and I prefer not to, because I'm in this situation. So it's almost kind of like, it's not, it almost to make them feel like they've done something terribly wrong, rather than it's an accident of circumstance. I think that's what we get a lot from customers, and we deal with a lot of low balances, and we deal with a lot of high balances as well. The high balances, you don't have much of an issue with regard to sharing information, but when you've got people who are just kind of normally just catching the wrong end of a bit of credit and that sort of thing, then they're kind of like, well, why do I have to do this? I've just got an overdraft of like £300. Why do you need to know about the last 12 months of my situation? So I think proportionality does come into it for me, and that's what I'm getting from the customers on the phone.
So it's proportional to the amount of information getting versus the amount of value you're getting, or perceived value. I think I suppose to a certain extent.
Yeah, I absolutely agree. I think the value exchange, everybody said this, the value exchange is really, really important. If a customer doesn't understand why they're sharing their data, why would they? They're not going to. So it is important that we explain really carefully why they're sharing the data. And the great thing about open banking, open finance data is it's absolutely 100% consented by the customer. So you don't get access to it unless the customer consents. So that value exchange right up front needs to be really clear. But we're seeing from our customers, they're getting sort of 75, 80% acceptance. So people are coming into a process because they either want something, they want a loan, or their mind is, how do I get access to this money for whatever reason I'm going to use this money for? Or they're in a very difficult financial situation and as we talked about, need help. And again, not everybody is going to want to share their data, but actually, as I say, that we're seeing this 75 to 80% acceptance to share it because it's really clear what they're going to get. And as was really eloquently explained before, it's either because it's going to make the process quicker, somebody's going to help me. I mean, MAPS did a survey 3 years ago on people's relationship with their money and how comfortable they were, and 79% of UK adults are too embarrassed to talk about their financial situation. So actually then coming onto a call when they're in even more financial distress, be it because they need to borrow money or because they need to get a repayment plan going, actually, not again, I'm saying it's not for everybody, but 75 to 80% of people are saying, actually, I'm really happy if you're the expert, if you can look at my data for me and tell me what I can afford and what's appropriate. Yes, please. I'd like you to help me because I don't really know where to start. And as you say, if you can then close down that conversation much quicker, that person hasn't spent 45 minutes on the call, they've now spent 15 minutes on a call with you. You can actually spend more time then with the truly vulnerable who maybe need much more help.
So we're talking a bit about, I suppose, financially vulnerable and affordability, and that's sort of quite a comfortable space for us to look at in terms of like numerically. I mean, what about techniques to look at sort of other types of vulnerability? I mean, are there data and tools and techniques that can be out there to do that, or even using some of the existing data we've got, even things like open banking? Can we use it to look at non-financial aspects or non-affordability type aspects? Are any of those kind of like bubbling away in the background? I mean, Stephen, looked like you were going to say something.
Yeah, I think there are some things, but I think we have to, until we know, we can't really assume. And what we don't want to do is go too far, because once you start categorizing everybody as vulnerable, then where's your differentiation in how you treat those customers, and it becomes about equality, not about equity. And I think it's really important we stick in that mindset of we need it to be equity. Some people will need a hand up, some people won't, and we need to treat those people accordingly. But that doesn't mean that you can't simplify your processes enough that everybody understands them. We're talking about, some quite technical processes, right? So open banking and chat AI and stuff like that. We've got customers who, quite a large portion of the time don't know they're in trouble yet. They don't know they're in financial difficulty yet, or they've got their head buried in the sand. They don't want to admit it yet. Our job is to educate those people and educate them in the most simple way. So when we're trying to show what that value add is, we have to be doing it in the most simplistic way possible. So we're on about the MAP survey there, but the FCA have also done something around, numeracy and how illiterate, as a country we are, what the average numeracy age is. And it's just really poor. There's like 20 million people in the UK who have the numeracy age of an 8-year-old, I think it was. So we've got to consider that when we're communicating with them. We use plain numbers. So we're trying to make sure that, when we're speaking to a customer, what is the ask? What are we asking of a customer? If we put it really, really simply, and we can do it with wording as well, but, if we're saying to a customer, you need to pay £5, why don't we just say you need to pay £5? Why does it have to be on a long written letter that's really complex and telling them how to do X, Y, and Z? We have to get in that space of being as simple as possible. And I think a lot of the time, we are products of our own downfall, really. As an industry, we've got some really complex wording and jargon, and we translate that onto customers, which is why sometimes you'll get customers who are disengaging. If we can make it as simple as possible and make it so that they feel they can have a conversation with us, we're in a completely different world.
And Dean, maybe like, how do you get that balance right in terms of, there'll be some people who do need it explained maybe in different terms, and other people who maybe want to have more of the detail really, because it would be not satisfying to have that enough, and the populations might be skewed one way or the other. I mean, how do you get that that balance right, though, so you're trying to keep as many customers happy and understanding things as much as possible?
I think the key is there that there needs to be choices, there needs to be options. So one thing with the, I think technology is bringing us a long way and really helping us with kind of, our sort of collections journey and the way we communicate with customers, is that the variety of communication channels open to customers now. Particularly, a vulnerable customer. Vulnerability can mean anything, right? A vulnerable customer might be, in a position where they're really nervous, really anxious. They want to speak to a human being down the phone. They want everything laid out for them, and then they want it followed up in writing because they've got that kind of really nervous predisposition, and that they want that level of reassurance. For another vulnerable customer, they might be the complete opposite end of the scale, and talking to somebody down the phone about their debts and how that's kind of linked with their vulnerability might be the most scary, overwhelming thing in the world. And for them, the ability to have that kind of digital online journey is key. But what there also has to be is the ability to for those two things to be interchangeable, and for there to be kind of clear points within the journey where you may start with a digital journey, but come a point where actually you need to speak to a human. And I'm sure at some point we've all, with one organization or another, been talking to an AI kind of chat robot, and got infuriated going around in circles trying to get through to a human. And I think that's key. It's that ability to be able to meet the evolving needs of customers, and the different needs, because vulnerability is a huge spectrum, and we need to be able to adapt and cater for as wider audience as we can in that sense. And I think that's something that technology is really bringing us forward in that area.
I mean, this whole concept of vulnerable versus not, and we talked about it, I think, at the start, in terms of affordability, almost like, or financial difficulties becoming almost like part of vulnerability. I mean, it feels like it's blurring to a certain extent. I mean, should we even be using the term vulnerable anymore? I mean, is that even the right thing to be doing? I mean, Enzo, I'll just come to you first. Stephen, I think you got burning issue, burning comment, but Enzo, what do you kind of think? Do we even need vulnerability? I mean, I know it's the title of the session, but should we just thinking about it as everyone?
I think it's a fantastic point you're making there. Vulnerability is now so broad; it's so wide. We did some internal analytics. We were using speech analytics, and we were searching for terms which would be associated with vulnerability. And we found 1 in 10 of our phone calls contained something which would be suggested would be a vulnerability. Now, this was a mention. This wasn't everyone saying that they were vulnerable. But when your terms are that broad, as Stephen said earlier, you're kind of like you're diluting it to the point where, are you going to treat vulnerable people any different than you're going to treat people anyway? So it's almost kind of, from a training perspective as well, we're training agents to be able to deal with vulnerabilities at the first line. And that has a knock on furthermore with recruitment, because first line agents, as people say, the call centres are the 21st century factory floors. The people you're getting to work in call centres, you're not paying them £35,000 a year, which I would think is kind of like, when you hear some of the conversations that people are having and what we're actually asking them to do against the regulations and with these broad terms of which they're dealing with, makes it a really difficult job to do. And I think from my point of view, with regard to what I'm hearing from customers, is I listen to calls all the time, and I hear what you'd call a straight up arrangement call. It's just going through, someone's called, we do ID and V, we identify, we explain what the debt is. And then we get to a point where someone will just say, drop something into conversation, where they reveal a vulnerability. Now, obviously, training wise, that's where we'll take the call, we'll deal with the vulnerability first, and then we'll see if we can get back to dealing with the actual customer intention there and setting up an arrangement. But it's there, it's kind of like, I think it's something, and I think it's a really good point with regard to, do we need the term vulnerability? It's kind of, it's such a broad term and it covers so many people now. I do tend to think it's starting to lose its meaning, and it's really trying to deal with different pieces of MI. Because vulnerability, you could have, you've got short-term vulnerability, say someone who's a roofer and they've broken their leg, they're not going to be able to work for a couple of months. Whereas you have more serious cases, terminal illnesses, that sort of thing, and what you're dealing with those. So dealing with those is trying to deal with them in the same sort of strata. It isn't really going to work. So it kind of, if everyone's vulnerable, it kind of loses its meaning.
But it feels like we've gone from this almost like binary sort of like you either are or are not into probably more of a kind of a grey kind of scale to a certain extent.
Absolutely, and that's the problem. I think I'm doing some work this week on categorization, and we just trying to, so we can get people dealt with in the best possible way, and it's really difficult to do so. The people are first line agents or digital solutions aren't doctors, and you're going to be hearing all sorts of conditions over the phone and kind of different things which you may not be aware of. So people are Google searching that sort of thing. And it's how to best prepare people for that sort of variety. So really, it's about, at some point, it's collecting that information. So using really good management MI. So I think the digital thing is really important. We've developed in-house when we're having conversations, a form so we can kind of capture the information and we kind of have an idea of where things are going.
I mean, Stephen, it looked like you were going to jump in earlier around whether we still need the term vulnerability as well. So,
I guess it's, we're always going to have labels and we're always going to have ways of tracking things, right? But the big question is, so what? Right? So it's okay having a vulnerability label and it's okay having a hardship label and all the rest of it. But we don't actually care about the label. What we care about is the treatment of the customers. So we need to just take a step back and try and think about why we're putting that label in place, right? And that label is that we want to make sure that that customer gets the right treatment because they need to be treated different from a BAU customer. Sometimes that is just us knowing, just having a flag on the account to say, hey, this person, for example, may have a speech impediment. So if you know that going into a call with a customer, it allows you to position the call slightly different. We don't have to make too many different sort of like adjustments for that customer. We just need to know some things are going to be much more serious than that. Yeah. So it's all about the so what. But I think that carries through from, from the point Enzo was making as well with training. So, when we do our training around vulnerability, everybody knows about Texas, right? But what is the objective of Texas? It's for us to be able to understand somebody's vulnerability and understand how it impacts them and what support they need for us. And I think it's always key, and the training that we do in-house is that we make sure that that's the message for our guys. So they have procedures. The procedures are there as frameworks for us to work against. What we care about is why have we got that procedure in place and what's it trying to achieve for the customer, and do we still achieve that? So if somebody doesn't ask a small bit of one of the questions, am I really that bothered if they got the right outcome for the customer? The question might not have been relevant. So I think it's all about that so what, and making sure that we understand why we're doing it. And yes, labels can be okay, but they can be okay as long as we're using them to get the right outcomes for customers. If it's an arbitrary label, it doesn't mean anything.
Yeah, and there's a nice link back into consumer duty, which I was going to go next in terms of like customer outcomes. And Suzanne, I was going to ask you there around sort of like, how do we sort of see particularly data around like evidencing good outcomes, sort of playing through? I mean, through this space in particular. I mean, it's it kind of describes a lot of collections under affordability and vulnerability. I mean, like, is data playing a role in terms of like evidencing the good outcomes, and it's easiest to say than done to do. I think it's my kind of impression, at least. What do you think?
Yeah, I think I think you're absolutely right. I think organisations are finding it difficult to do at this moment in time, but a lot of that is based on the fact that excuse me, I'm sorry. What's happened in the past or up until now is that data tends to be looked down a product line. So data tends to go down, what product has the customer applied for, and how is that customer working with that product, be it a mortgage, a credit card, a loan, whatever it is. It's quite linear. What data enables any organization to do is, as everybody's been talking about now, it's about the customer. It's not about their product. It's about their lives and the impact that their spending and their lives and what's going on around them is having on their ability to use the products that they've got. And so, going back onto this vulnerability comment as well. You know, people fall in and out of vulnerability for all different reasons. There are absolute fundamental vulnerabilities, as we've talked about, from maybe a speech impediment, but a vulnerability can happen because something has happened in your life which is affecting you here and now. It might be really short term. It might only be affect you for a month, a week, 3 months, or it could be longer term. So therefore, I guess the other opportunity that data does, it's that longer term use, that longer term engagement with a customer's financial lives and what they're doing, that really Consumer Duty, I think, brings to life and enables you to manage outcomes, intervene and enable customers to have better outcomes. Now, and also when we talk about Consumer Duty and outcomes, often we're talking about the negative outcomes. It's positive outcomes as well. We want people to have good outcomes in their life, not just to go from a bad position to a better position, or bad position to a good position. We also want people who are in a stable position to continue to have a stable or better position. And so managing their data, their lives through their data, if you like, engaging with them early, encouraging them to continue to do the right things or change or do something different. And when you come into those kind of, again, if you use the term vulnerable, those times at which people do fall into vulnerable, it's how do you give them help and support at the right time, not when it's too late, not when they've been financially impacted, but before they get financially impacted. And that's the big thing for us in Consumer Duty, is getting ahead of, being able to predict what you think might happen and encourage people to make changes before it happens, so they don't need that, they don't fall into that vulnerable term, if you like.
I mean, are you finding that? Sorry, Stephen, go ahead.
Sorry, Chris. Yeah, I think that's a key point, right? So when we talk about vulnerability, we talk about Consumer Duty and right outcomes. Your right outcomes start from onboarding, right? So the right outcome for a customer is that they're never going to raise in the first place.
Yes.
So, and I think that's why it's key. So when we talk about vulnerability, you know, people always assume there's this small little vulnerable team who deal with all vulnerable customers and nobody else does. We just can't work like that anymore. You know, we've had every single person in our business up to the CEO trained on vulnerability, not all to the same level, obviously, because they're not all frontline customer dealing people. But if you've got somebody who's designing a front end product web page, should they understand customers' vulnerabilities and understand how they impact customer vulnerabilities? Well, of course they should, because then they can make their product easier at the front end. You know, when we're doing stuff like educating customers, which I think is a super key point for us, we have to do it in the right way. So where we don't disengage, so I bet everybody here has had an email off one of the big banks, or somebody that's, you know, talking about financial difficulties and, you know, we've been through a credit crisis and if you want to contact us. Does that really work, or should you be targeting the people who have got changes in behaviour and using that data to get the right outcomes for our customers? Because otherwise it just becomes white noise and disengaging. So I think that's another key point what we're doing there. It's all about like the levels that we want to take it to and to get that right outcome for the customer.
I mean, how do we, I mean, talking a bit about pre-arrears there, I suppose, and even going even further upstream into the credit granting process. I mean, like, how do we as collections professionals, or those who works in collections and recoveries, influence that process upstream? I mean, is that getting easier? I mean, is Consumer Duty making that easier to do in terms of saying, look, you've got to stop doing that. You've got to stop doing this because it's going to help us down here. I mean, I mean, you're finding it easier? I mean, Dean, what are you finding, especially since Consumer Duty came in? Is an extra lever we can use to help get better outcomes, but we're the sort of reporting the outcomes that need to be changed, if you see what I mean?
Yeah, I do, and I think it is, because, you know, Consumer Duty has forced everyone, and I think it's a journey the industry's been on for a while anyway. But it's kind of forced us to look at not just customer outcomes, but or good outcomes, but also the customer journey and how intrinsically linked those two things are. You know, you can't have one without the other. You can't have you can't possibly sit there and say we've delivered a good outcome for this customer if you haven't considered the journey that customer's been through to lead them up to that outcome. And I think that the increased focus on those customer journeys and the way, you know, kind of businesses are now having to really consider those if they weren't already. And I think that almost has forced everyone to take an inward look at themselves, and it does help identify some of those kind of friction points some of those areas perhaps in the customer journey that it happens on day one, and then 12 months down the line potentially rears its head as a problem. And I think whereas possibly that would have gone unnoticed in years gone by, I don't think we live in a world where that's possible anymore, because we have to be considering customer journey from day one.
Yeah, I mean, Suzanne, I suppose just in terms of like that pre-arrears conversation, I mean, it can be difficult to do, and you often get you'll get feedback from customers who are saying, well, why are you talking to me about this? Because I don't actually believe I'm in financial difficulty, even though the data might say, based on probability, there's a high probability you probably are if you just look at it mathematically. What kind of techniques are you kind of seeing in terms of like how to almost like broach that conversation and sort of start that engagement process? Any kind of tips or tools you've sort of picked up really just to start and to get people starting to engage?
It goes back to that personalization piece. I think if the call is kind of, as you say, it's out the blue, I wasn't expecting this, I think I'm fine, versus what we've noticed is X, Y, and Z happening in your life, which is how you're spending the money, what you've got left, whether you're in your overdraft 70% of the time every month, and actually it's increased to 80 or 90 in the last 30 days, or you're using your credit card for actually buying groceries, which weren't before. So all of those trigger points that are a potential to lead. What I think we're seeing is that when you talk to people through their actual life, spending habits, whatever they're doing, their behaviors, it's relative and it's personal, and so they get it. And then if you can then explain why that might become an impact going forwards and how that might affect them. Now, again, it come back to the consumer duty again. I don't think the FCA is expecting that every single interaction with a customer is going to lead automatically to a positive outcome, because at the end of the day, consumers will still make their own minds up. But it's how do you manage that opportunity to intervene and potentially help that customer make that right kind of change for the better.
Yeah, I mean, how much do we think of it almost like as like a phase to almost like start the engagement, and then once you got the engagement, be it sort of like on the phone or be it digitally, then you can start exploring all the different issues. But it's almost like the start, and then you've got the rest that almost comes out. Do we almost like need to sort of think of it almost like as those two, which is almost like the advertising and then the fulfillment?
Yeah, but most definitely. We've seen within when you start to share people, or when people start to share their data and start to engage with it, they actually appreciate the fact that they're getting this help and support, because it's an encouragement. It's not, somebody's not judging them now, somebody's encouraging them, and they're having a better kind of effect on them over time. But yeah, that real kind of deep understanding of who I am and the relativeness of this in my life right now. I say often, people don't buy financial products. They buy access to stuff, so they can go and buy a house, they can buy a car, they can fix the washing machine, they can support their kids going to school. Whatever it is, they're not buying a financial product. They're buying something to live their life or something to do with their life. So making it personal about their life, people then are far more likely to understand why they're getting this help or support or guidance or change or whatever, rather than, did you know you're using the product wrong? And unfortunately, that's where we start going, you're using your credit card wrong, or you shouldn't be doing that with your overdraft. And sorry, I don't know. I don't understand your product. I'm living my life over here, thanks. But if you make it relative and explain why and the impact on that, which is, as you say, it's that step on engagement and help and support, rather than big bang, right, okay, we're taking you over in this direction now. It's encouragement and supporting people as they move through that.
I mean, Enzo, what's your kind of view in terms of, like, I suppose it's thinking about that early stage engagement that then links into those conversations around vulnerability? I mean, do we have to think of it? How should we best think about it? What do you think works best with customers, particularly if we're trying to flag things early?
Well, I was listening to Suzanne, very interesting, and I think it's a really good point that with regard to customer journey, I think as early in the customer journey as you can to kind of introduce these things. And I think we're in a really interesting time right now because a lot of the technology, a lot of the open banking is still quite new, and so you've still got a lot of customers, debtors, if you will, who have been through when they applied for their loans and finances, that sort of thing, didn't do open banking, that sort of thing. Now, once it gets to late stage collections, it's really difficult to introduce open banking at that stage because it's, you know, it's kind of like, oh, it's the debt collectors and they want to know all my details. So to introduce it as early as possible. So I do think this is going to get easier as people get used to the fact that information is going to be shared. It's not something which is being used against them, and it's to get a good outcome for them. And I think it's that quality of conversation all the way through the customer journey which really will help. As Suzanne was saying there, like the earlier you can have that conversation, the better. And it's not to tell them that you're doing something wrong. It's to just kind of like, you know, where there are some red flags.
And there's a question here just actually around pre-arrears solutions in terms of like what kind of things can we use to sort of like flag pre-arrears. I mean, Suzanne's talked a bit about open banking kind of data, but Stephen or Dean maybe just like, are there other things we can use, or what's the best kind of strategies we should have to try and get that engagement?
Yeah,
There are, yeah.
Oh, sorry, go on, you go first, Dean.
All right. There are, yeah. There are things, you know, we can use things like kind of bureau data. So for us at Pepper Advantage, we're primarily kind of mortgage industry. So what we tend to see is we're typically the last thing to go wrong, because if there's one thing you're going to pay, it's the roof over your head, right? So I think we can use things like kind of bureau data as well as open banking to kind of give us that early insight into if someone's missed a credit card payment this month, is that an indication that they're starting to struggle, and maybe next month or 3 months from now, then they're going to miss their mortgage payment? So it can be really useful in that sense to kind of give us those sort of early indications and help us kind of start looking at how do we address that now before it's actually become an issue in terms of, you know, your mortgage, the roof over your head. And you know, one of the kind of key things there is around the signposting. And I think with signposting, it has to be relevant. It has to be kind of proportionate. You know, there's no point, you know, having kind of a one size fits all where, you know, you signpost everyone to one space, because the support that customers need will impact where you signpost them to. But to kind of circle back to your question, by identifying these kind of trends, or these, I suppose, red flags earlier, if we can get people support earlier, you know, we work with a number of partners of kind of sort of independent financial or sort of debt advisors, to help kind of start making better choices where applicable, and kind of promote those sort of better habits that might pick up the issue and almost sort of negate the issue before it becomes a real concern. And I think that's the key. But balancing that with, we're not here to prejudge. And this links back to something I said earlier in terms of context. Data's fantastic. It can give some amazing insights, but it can be lacking context. And we need to be really careful that we're not using data and going into interactions with customer with preconceived ideas or you know, making kind of prejudgments. So that's kind of a key kind of balancing act there.
Yeah, and Stephen, you're going to jump in as well, just in terms of like, you know, early things we can do or other things we can do to sort of like try and flag and get that early kind of engagement. Any kind of tools or tips for the team here?
Yeah, and this is about journey as well, right? So we've been talking about it the whole way through, but collections doesn't start at the point somebody misses a payment. It doesn't even start at pre-arrears, it starts at onboarding. So if you've got a engaged customer who knows they can communicate with you and knows how to communicate with you, or you know, it's simple enough that all your tools are available for those people to go have a look at, I think that's key number one. The CRA data is good. My sort of issue with the CRA data, if you like, is generally we'll find out 2 months after. So somebody might have missed a payment on their credit card, and we know 2 months later, well, actually, it's probably too late for us to be doing too much about it at that point. So I'm in a luxury position where, you know, internally we have the credit card, so we can see spend behaviour. But I know Suzanne's talked about as well in open banking, the behavioural characteristics and the changes in behaviour are one of the biggest identifiers of whether somebody's likely to enter arrears or not.
Yeah, this whole idea around timeliness is kind of is a big challenge in collections, isn't it? In terms of like evidencing good outcomes. I mean, how do we start thinking about that in terms of like, because we might not see whether it's actually been a good outcome until 6 months, even a year's time, right? So, and it's like, how do you almost like use proxy measures to sort of like preempt some of that stuff?
And I think just because the customer doesn't get the right outcome doesn't mean the journey wasn't right. So
Yeah.
if you can create a journey for a customer and they get the right outcome at that moment in time, the plan might still not be successful because something else changes. So I think we have to be careful not to judge the right outcome on the actual end outcome, because sometimes there's other stuff in there that can change, that can make us look away from it. I think we should always be looking at, we should look at the end outcome, and we should go back to it. And it's not going to happen all the time where we're saying was our journey and our decision making correct. But that's a key bit. Was our journey and our decision making correct? And we'll never get it right 100% of the time. But if we're getting it wrong more often than we're getting it right, then we need to look at the journey. If where we're getting it wrong, we can see that it's an agent mistake, or that customer's had a change in circumstances. So actually, at that moment in time, the outcome was right for them. But if I went back now, would I make a different outcome for that customer? I think we have to be careful not to be too linear with things like that.
I think that's such a great point, Stephen, because you're absolutely right. No one's got a crystal ball. No one can tell what's in the future. The thing that we're all trying to achieve is making the best decision we possibly can at that point in time. And then what are those engagement points, and how do you keep that flow through? So we're seeing some of our lenders at application are then having an ongoing check. So once a month, they're checking on their customers' performance of affordability as they move through. So that ongoing review of the data, and they're already seeing a 48% improvement in first bill and 33% improvement ongoing, because you're providing that. But you're right, it's not 100% stopgap. You're just getting visibility that you can deal with. But yeah, life happens, doesn't it?
And one of the things was made in almost like the pre-discussion, we're talking about sort of, I suppose, balancing that versus, I suppose, treatment versus collections as well. And I think that was kind of like, how do we get that balance right in terms of like, just writing everything off as one example versus obviously then taking people through a journey on a sort of, I suppose, contract commitments, but then also making sure they're actually looking after them, because if they got changeable affordability kind of issues. I mean, how do we sort of get that balance right between all the different parties? I mean, it's not easy sort of sitting in the industry, really. I mean, Enzo, what's your kind of view on that?
I don't think, as you say, it is really difficult, and there isn't ever going to be one answer to this. I mean, people's situations are complex, and they've been getting more complex as things goes on. I mean, looking back in time, you have, I thought, was it the 2008 credit crunch? I thought was going to be, we'll be paying that off for generations. Then furlough we'll be paying off for generations. There's always something which is we're going to be an impact shock, and it's going to change people's situations massively. All we can really do is try and deal with people as much as you can on an individual basis, but obviously we've got resource issues there. It's difficult to employ people, it's difficult to recruit people, and it's really difficult to kind of get the right solution for everyone. So your processes have to be you have to be constantly reviewing your processes and constantly reviewing your outcomes to try and get the best outcome as you can for people. We tend to look at it as kind of like you're working with customers. And that's it. It's not hand holding. It's really just understanding what the situation is and try and make it as easy as possible for them to come to a solution which is right for them. Now, whether that's it, and I think that it's got to be a hybrid solution. So there's going to be some digital in there. There's going to be some intervention at a human level there as well. But I think with those two things and using the right MI, then you can actually get to a good place. But you've got to be constantly reviewing it, because the situation is going to change as well. Events change and the economic situation changes.
Okay, very good. So just, I suppose, just looking a little bit to the future. I mean, where do you think this whole conversation, obviously, it's evolved over the last sort of like 4 or 5 years, even longer? Where do you sort of see it evolving from this point on? In the back of our mind, also thinking about cost of living, energy, what's happening economically as well. I mean, Dean, what do you sort of see the development, sort of how it's going to develop from here?
Yeah, what a great question. What does the future hold?
You need that crystal ball.
It might change, but this is okay.
I think, look, we touched on that earlier. I think expectations, not only from the regulator, but increasingly more and more from the customer side, are increasing. Particularly since COVID, and as we move through kind of cost of living now as well, that the expectations are so much higher. Than what they were 10 years ago, 15 years ago. We could get away with, the customers in arrears, let's set a payment arrangement, pay a little bit on top of your monthly payments, and that was it, one and done. And that, and I think for the better. We're so far away from that world now. We work with such a myriad of different kind of forbearance options and considerations and support mechanisms to help customers, and those expectations, I can only see them kind of increasing and continuing on their current trajectory. I think the expectation and standard across the industry, I think, is becoming more uniform and more aligned now with sort of consumer duty, etc. I think whether we are talking about a mortgage product or a credit card, I think a lot of those expectations now are being set a lot more standard across the industry, and I think customers are getting a lot more kind of consistent, journey and outcome regardless of the financial product. And I only see that as a good thing and something that's going to continue.
I mean, Stephen, what's your kind of view on where we go from here?
Yeah, I think there's two key bits, right? So I think one is educating. Financial education is just not really a thing, and I think it's on us as lenders to educate customers better around what they're doing. And I think if we make that seamless enough, the psychology of people is always that if they make the decision themselves, they're more likely to take that decision than if we make it for them. So if we can lead people to that decision. And I think the other side is machine learning. AI is going to, if we look at the trajectory of technological advancements over the last 4 or 5 years, we've now got a customer base who are probably more digitally engaged than ever after COVID because they had to be. So I think that's accelerated that. So I think it's on a high trajectory. I think the thing we have to watch out for is humans have a disdain for technology. We hold them to a higher degree. So if a customer is on the phone with an agent and they make a mistake, that's okay. If a customer is speaking to a machine that makes a mistake, that's not okay. And I think we have to always remember that customers will feel that way. So we have to make sure that the journey is as seamless as possible. And there is always an out for humans if we need to.
Yeah. Enzo?
Yeah, it's a really difficult one. I tend to think technology is going to make things a little bit easier for everyone as everyone gets used to it. Because, as Stephen says, people are a bit wary of technology. As long as they're getting right outcomes from that technology, as the situation goes down the line, then people will be happier with it. We're finding that more people are happy to deal with us via text, email, rather than the old-fashioned letters and that sort of thing than they were previously, and are more willing to actually kind of like disclose and give us information which they wouldn't have done before. So that's a really good thing. I mean, and I think it tends to come with the cultural. It's good to talk. Time to talk date, all that sort of thing with regard to mental health has kind of gone across the board. So everyone tells us kind of everything now when we're on a conversation, which is very different than it was before. And I think it's kind of incumbent on us as an industry to kind of how we handle that information. And it's really important how we deal with that sensitive information correctly, because you really want to make sure you don't want to. We want to be proportionate with what's happening with the information we're getting from customers. As I say, my feeling is to try and lead customers through as easy as we can, remove any obstacles, and I think technology will help us to do that. With regard to machine learning and the ChatGPT and that sort of thing, I'd like to let it bake in for a couple of years and see where it goes before we kind of implement that on vulnerable customers.
I do think this idea around feedback loops is kind of interesting in the fact that like the environment we live in isn't in isolation, and sort of like it feeds on itself. Like, so we have to constantly be changing, constantly staying ahead of things, which I think is the point you're kind of making, really. It's very interesting. So, and Suzanne, what's your kind of view, and like where do we sort of like go in the next couple of years, really, around on this topic at least?
I think there's 2 points, very similar to some of the points raised, but probably I look at it slightly more dramatically, I would guess. I think, first of all, the younger generation expect services to be personal, and it's amazing how quickly that starts to bleed into any customer feedback loop of, everything is immediate, everything's now, and everything's about me. So I think customer expectation is going to change dramatically in the next few years. People are sharing their data for all sorts of reasons, but the main thing is speed, expediency, and what they want. And the reason I feel very strongly about that is there's a reason Apple bought Credit Kudos. There's a reason Apple have bought an open banking, open finance capability to be able to provide more services to their customers, because that's exactly what Apple customers want. The whole thing of Apple is, I'll make your life easier and I'll tell you what you need to do, and they're just going to expedite that. And then I think the other point on AI is really interesting. So oncology have used AI and machine learning for years. They use it to be able to speed up the decision making for patients who are presenting, so that they can get to the right plan for them and hopefully have better outcomes. At the moment, in a lot of financial decision making, there's a human that's making a decision based on bias, based on data that's been used for years, which is based in bias because it's where people live or what they've done in the past and stuff. It's outdated. We don't need to rely on that anymore. AI means we can make decisions based on what people are doing today and how that projects forwards. And again, what that doesn't mean is you take the human being out of the equation. It means you use the human being to help people who truly need it. So at the moment, we put humans on everything. AI for me is about use the machine learning to take the grunt work away so that humans can deal with humans and support them where they need them.
Okay, well, fantastic. Well, to all the panel, thank you very much for joining us today. I know we're sort of like running out of time, so really appreciate it. And with that, hopefully we'll hand back to Colin, if Colin's available.
Yeah, absolutely. Hi, Chris. Thank you, everybody, for your contributions there. That was really, really interesting, and taking us down a different route that I didn't think we'd go to actually in the end, but it really, really brilliant. So thanks to all our panel for that. Really, really good. Obviously, thanks to Moneyhub and Webio for their support today of the event. These kind of things make it more worthwhile with the tech angle as well. So that's fantastic. Thank you for that. Obviously, thank you for our panelists in this session. So it's obviously thanks to Chris, Enzo, Stephen, and Suzanne for that. And then also, obviously, thanks to our speakers who were in our earlier session. You can see the list there. Big thanks to all of those people for their time today. Really good to get their angle. As I mentioned, both sessions have been recorded, so anybody who wants to watch this back, you can do. The recordings will be ready in the next 24 hours. You need to register to receive those updates, so great for that. But want to flag up as well for you, this doesn't end today. We always like to carry on the discussion throughout the year. We like to run these collections ones every 6 months. Next month, we're running a lending focused one, totally different part of many of your businesses, but different people. Please encourage them to attend a lending technology think tank. That's on the 21st of March. There's a link here that will give you a list of Credit Connect events on our website. So have a look at those. Also want to flag up, we're going to bring some more face-to-face events, hopefully, to you this year. We cover a bit in the commercial business sector. We've launched our new event as well, the Credit and Collections Industry Awards. There's something for everybody in terms of entering that. If there's some collections performance that anybody wants to highlight, either from a consumer or business angle, that'd be great to hear from you. And then obviously, tail end of the year, we'll run our face-to-face Credit and Collections Technology Think Tank, our fourth one. Great for people to meet there. We tend to run 4 sessions similar to this, but obviously some networking and exhibition elements to that as well. So if people want to attend that, that'd be great. And then the end of the year of that day, we run our Credit and Collections Technology Awards, 8th annual year of that. And that'll be at Thursday, the 7th of November at the Midlands Hotel in Manchester. So we'd really like to see people attend that and really highlight their excellence at those awards. But let me round off by thanking everybody who's also contributed with their questions, a lot in there. As I mentioned, that'll be covered in our review, and everybody's contributed to the polls. That's great as well. But we'll round up by saying thank you for everybody's time today, and we'll see you at a future event. Thanks a lot, everybody. Cheers. Bye-bye.
Thank you.